as we always say in the beginning of the session, this session is purely educational, and whatever we would be discussing would be individual views, by no means any sort of buy sell recommendation. Please take the sectoral discussion as a starting point, and do not construe any names taken during the conversation as a buy sell or hold. So today we have with us a very young and energetic Dhruv Rawani. He's a CPA LLB and managing partner at Shriji FinServe LLP. He has got over 15 plus years of market experience, and he's also a mutual fund distributor for last 7 years. So a very warm welcome, Dhruv. Anything which I missed on your introduction, please add to this.
No, no, absolutely not. This was a warm introduction. Thank you for that, Prince. So yeah, I have been a mutual fund, AMFI registered mutual fund distributor for the past 8 years, and my equity journey began somewhere around the global financial crisis. That is started learning my ropes, and in a full-fledged manner, it has happened since 2016. You can put it that way. So that is a brief journey that I've had over the past 10 odd years.
Great. So Dhruv, walk us to the starting days. You talked about like you started near the global financial crisis, right? So how it all started? Any family background on investing, or you were the first one to start?
So yeah, so certainly my father is a chartered accountant and he has been investing since the market inception right back in 1987. But it was just a serendipity or whatever you might want to call it that I just finished my 10th and things were just boiling around the globe, everything. So I just started reading the newspapers, and that is how I got inclined towards the stock markets. It was a question of when and not if, or that was about it. But yeah, but that was more about tracking and just plying the ropes. There was not too much of a know about how things work, macroeconomics, micro, fundamental, technical, nothing much. More news driven, more trying to understand what is happening around. Along with that, I started my CA and I kept on just following the news and what is happening. And I think once I completed my CA somewhere around in 13, that is where I just started with whatever money I'd accumulated. I used to start investing side by side, and then in 16 is where I started full fledged with this distribution business of mutual funds and side by side working around with my wealth investing in direct equity.
That's great, Dhruv. So, Dhruv, I would ask you for a opening remark, come like a brief monologue around the topic, and then as and when we have questions, we'll stop you in between. And meanwhile, you can thoroughly cover whatever we have on our agenda for the day.
Perfect, perfect. So, so, so why power infra, what it is? So I'll just give you a brief background about my investing style, and then that is how we'll enter the whole sphere of energy and power. So, since 16, when I've been investing like everyone else, you burn your fingers, you make your mistakes, and you keep on developing your thesis and pay your fees to the market. Samir Arora rightly said that, whatever losses you initially make in the markets, it is actually a fee that you pay to the markets for teaching you the ropes. And market is the best teacher, I believe. And along the way, as I kept on reading and everything, I had a very strong inclination towards economics and towards geopolitics. And what I believe, like being a chartered accountant, of course, we used to understand how to read balance sheet, cash flows, P&L, and everything. Uh, I truly believe that, in spite of whatever we understand and try to do your fundamental bottom up research in a particular stock, if you are able to get even a 10 to 15% grip on a top down approach towards how things are working, you can really catch a tailwind and ride that tailwind for the years to come. My strategy mainly revolves around buy and hold. but that does not mean I'm not from the camp that it is buy and forget. It is buy and hold and review. I would put it that way. And I run different silos within my portfolio. So it's not that I just have one strategy around it. I categorize a particular stock, see which framework it fits into, whether it is a cyclical, what sort of cyclicality is there in that particular, stock or the particular business. Understand the moving parts around it, which can, affect the profits, the valuation matrices, the operating leverage, whatever you want to call it, and accordingly put it into a particular bucket. One of the buckets that I truly focus on is the macro tailwind. So while there will be a small, buy and hold strategy where, it might not have a macro tailwind, but at the same time, there are companies which just keep on serial compounding and which are good businesses in that sense. So there, there is not too much of a macro tailwind, but a major part of my portfolio works on some bigger major tailwind, and based upon that, that particular thesis is built up, and around that whole value chain and everything I study, and then I build up the portfolio. So this is where I have been studying, and for the past, I would say 4 years or so now, since the COVID times or anything, after my research and everything, I came across this thing where, the whole world has been talking about green energy. There's a lot of geopolitical context around it, in terms of supply and demand, the green finance and things like that. And that is how I stumbled upon. And the more I went deeper and deeper into it, I felt there was some serious turnaround or change happening around this thing. And the more I went and spoke to people in the markets who are not too old, like who have not seen the 90s and the 2000s, the bull run of that, but who have been over the past 10 years, I felt that there was a lot of, no one really wanted to touch this space. You talk about power, you talk about energy, you talk about minerals. All these spaces are something that people will say, just ignore them. They are not going to make you money, and that just built a lot of curiosity, like why and what is this really the case. And so what I like is I found this particular theme to be more robust, more to be a long term, like majorly probably a decadal long theme we are looking into, and the more I'll talk about it in detail. But and it was something that not a lot of macroeconomic factors like an interest rate or change of government or things like that could actually move the needle. And it fits within whatever tailwinds or whatever tailwinds that India would probably have. If you are betting on India, then you really have to bet on the energy, power, and the mining space out there. So they all, I've not mentioned mining out here, but I feel they all three are very much interlinked into how things work. So I'll start with the whole energy, and I don't a lot of people in the market talk about solar individually, talk about wind individually, would talk about electricity distribution, smart meters individually, and things like that. But it is you have to when you look at a holistic approach and when you try to join the dots, you try to understand that the picture is much bigger, it's much more interlinked, and then you try and understand that whole picture, and then you try and figure out what is the entire value chain of how things are moving, the money flow is moving, how the money flow is moving, and then you play around with that. One important point that I would like to point out here is that I at the end of the day, I strongly believe that long-term money or long-term valuation or stock prices would be driven by earnings. And by that, I mean the profit pool of companies. So while we might look at the sales picture, the order books, and things like that, we at the end of the day have to try and figure out the profit pool that we are going to, focus on. Because in the initial days, you will have order books, and that is how the stocks would be valued in the private equity space. We all know how people value on the GMV and XYZ types of things. But in the public market specifically, I would strongly believe that at the end of the day, it is the profit pools which will really help you pick out the multi-baggers that we all keep on sort of looking on. Before I dwell into one critical disclaimer, like you just mentioned, I'm not a SEBI registered RI or anything. So this is I just do it for my personal self, and I'm just trying to share the knowledge with every one of you. I'm not going to recommend any buy or sell stocks, but we'll certainly try and delve into businesses. What are the moving parts of those businesses, and accordingly guide you on them. So if we look at the whole energy space, since the whole mankind, since Stone Age or whatever you may want to look at, there have been five different energy mix that have happened over the past several decades or centuries, or you know since human mankind has been born. you know in the early days we had stone, that is a stone age, and then we went towards wood in the 1700s, 1800s. And I'm talking about the first industrial revolution, where they started using wood, and then from wood we migrated to coal. The discovery of coal was made. From coal we went to steam, and all that. Second revolution happened. A third revolution in the 1900s happened with the discovery of oil, and then from oil we went up, started discovering gas, and natural gas is there, and all the derivatives of oils and chemicals and things like that. So in the entire history of human mankind, these are the three major energy sources which have been there. And energy is one of the biggest drivers. It is there everywhere around us, but we just don't probably know it or think about it in a greater detail in financial terms. But it is the biggest driver about everything. So you had wood. From wood you went to coal, and from coal you went to oil. Post oil, over the past 100 years, we have not been able to figure out what next. So one of the things that the whole world has been trying to do is trying to fit electricity somewhere out there. But it has not been possible till now. We tried out nuclear, but nuclear had its own challenges. And then the latest trend that has been of solar, wind, hydrogen, hydropower, things like that. And I would categorize them as renewables for the time being. But if you look at the characteristics of wood, coal, and oil, and you can take a gas as a derivative of oil, so I'm not going to focus on gas too much. But if you look at these three things, they all had some four specific characteristics. And the four specific characteristics, if you look into this, were very simple. That, the coal, wood, oil, they were all available. So, you had plenty of oil once it was discovered, you had plenty of coal once it was discovered, wood was always there in terms of, the trees and everything. They were available on demand. So, you could go and cut the wood whenever you wanted. You can go and dig the coal whenever you wanted. You could go and rig the oil whenever you wanted, things like that. It was reliable. So when reliability, I can get it when I want. I have to not rely on something else, or the temperatures or the climate or XYZ, to focus on it. And the fourth point was affordability. As the scale, as things started getting scaled up in all the three spaces, we could make all three sources of energy affordable. So all these sources of energy, for any source of energy to be used up at a big scale across the world, these four characteristics had to be fulfilled. To some extent, nuclear was in a space where it could be fulfilled, but due to some other reasons, be it on security or XYZ or health concern or anything, nuclear didn't pick up. In the meantime, the world realized, because of the climate change, that we need to add another characteristics now to this particular thing, and they added the word cleaner. So we now have an energy source, if which has to replace the human mankind and drive industrialization and human civilization forward. It has to be available. It has to be available on demand. It has to be reliable. It has to be affordable, and it has to be cleaner. That is where the whole renewable space comes into picture. So you have wind, you have solar, and you have hydrogen. We'll discuss about that. They all have to fulfill the characteristics. Now, solar and wind, they are available and they are affordable, these, and they are cleaner. So the three characteristics they have been able to fulfill. But the two important characteristics why these things had not been able to scale up till now was something like it was not available on demand and it was not reliable. So you can't ask for, sun or electricity from solar or from wind, whenever you want. You have to rely on the sun and the wind, the wind speeds and everything, if you want to generate that source of energy. And you have to drive around your cycles around that, which is not practically possible. So, like solar is not available in the night, it is only available in specific places and things like that. So these are the various challenges that these two particular sources of energy truly face. Similar is the case with hydropower. Hydropower requires a ton of capex, and you require the particular water flow, water speed, things like that, and only then hydropower can be done. So along the way, so while we were not able to replace electricity in an entirety, there came up the whole hydrogen bandwagon. So hydrogen was a fuel which was green, which was clean if it could be made from sources which was cleaner, because till now we used to make hydrogen from oil or natural gas, and it was called gray hydrogen or blue hydrogen and things like that. But it was not again completely clean. So, and it was available, reliable, available on demand, and even affordable if you could build it on scale. That is where you have the whole energy supply chain which is getting built into. So they said, okay, fine, although if solar and wind is not reliable, but whenever it is available, can I make that energy, try to store that energy, convert that energy into something, and then try and use that energy into whenever I want to use it, and that is how you make it more reliable, and that is how the energy hydrogen thing fits into place. So you have your whole solar and wind generation, which will be uh, generating your electricity as and when it is available. That electricity will probably stored into energy packs, or it would be straight away transferred to an electrolyzer if it is available. Through the electrolyzer, you will have hydrogen which will be generated, and that hydrogen will be somewhere stored. So this is the value chain that they are trying to develop, saying, okay, fine, if although I can't try and make the solar and wind whenever I want, but at least hydrogen is something that I can use whenever I want. And at the same time, the battery packs in which the energy or the electricity will be stored can be used anytime. Again, I'm still, even till now, I'm speaking only on the global supply chain, or in general, which was I was speaking to. Now I'll stop on the global front. I'll go down to the India front. In India, oil has been our major importing, item, and it comes with its own geopolitical risk, currency risk, and things like that. And we have seen up teen times over the past 20-25 years how oil can be used as a weapon, if it has to be worked against India. So this is something that the government of the day has realized time and again, and that is why you have a lot of push towards the whole ecosystem of renewables and hydrogen, not only from the government side, but also from the corporate India side. If anyone, I would really recommend everyone to just go through a small part of yesterday's uh, address by Mukesh Ambani, where he very categorically explained this entire value chain in detail. What Reliance is actually trying to do is very simple. It is trying to make this entire value chain for itself, and once it satisfies itself, it will probably try and export this particular thing either internally, or export it outside of India. But he very categorically mentioned that for any nation to succeed in a big way, it requires energy security, it requires energy affordability, and it requires energy reliability. At the moment, unfortunately, India doesn't really have that thing. While we have our geopolitical friendship with the Middle East of late and Russia and everything, but still it can be weaponized, and the suppliers know that we can't stay without oil. And at the same time, you have the whole forex thing, the US dollar thing. Again, it's a different spectrum. That whole geopolitics about it we can discuss in greater detail sometime later. But that is a very important requirement world over. When any investor or very any company will look to invest in any particular country, it requires two things very much, abundance of two things very much. It is not your stable government or anything. It requires labor. It is not necessary that it has to be cheap labor, and it requires a clear source of energy. One of the reasons why other Southeast nations have faltered after picking up a start, be it Bangladesh, be it Vietnam, and things like that, in capturing the big value chain has been this whole energy security mix, because they falter when it comes to energy security, and that is what companies want, because that is something that they can't bring it to the country. You can bring labor, you can bring capital, you can build goods and everything, but the whole manufacturing setup, which needs the electricity, the grid supply, the coal, the oil, whatever you may want to call it, that can't be bought by the company out here. It has to be present domestically in abundance and in reliable way. So one of the things that has always saved India is the abundance of coal that we have always had. So that has been some sort of a balancing factor for us. And of course, the close to 30% or 25 to 30% of oil generation that we keep on doing year on year internally, domestically, that has been to some extent, made our case reliable. But the government and everyone in India knows that if really India needs to be, and the Make in India, or the PLI schemes and everything need to work, then India needs a stable and reliable power or energy supply. I would not put it power supply, an energy supply. And that is where hydrogen comes into picture. That is where renewables comes into picture. And that is where the whole EV ecosystem comes into picture. The reason why this all things are being pushed is very simple: to reduce our reliability on oil. That's the only objective. Yeah, while we talk about clean energy and green energy, that is the climate goals that we all have to achieve. But I would say the primary motive for everyone would be in the first place to try and get this energy security for India as early as possible. Now, when we look at the present, or the power setup, for the time being, I'll now, from the whole energy subset globally that we started to, we went into the energy subset of India. Now we focus on the power subset of India. And when we look at the power subset of India, these are the Central Electricity Authority of India details. Our installed capacity as of March 2023, if you look at the energy mix out there, the power generation mix out there, close to 50% of the installed capacity is thermal, and close to 25% is solar plus wind, which is what I would call it renewables. The rest is hydro, nuclear, gas, etc., biomass, and things like that. So it is 50% thermal, 25% renewables, and close to 10% hydropower. However, when we look at the generation point of view, close to 72% of our electricity which has been generated for the past year has been generated by the thermal. So 50% of your installed capacity is generating 75% of your output, whereas your 25% of your renewable energy capacity which you have set up is generating only close to 10% of your output. Now, why is this? And then the whole concept of PLF, PF is what we'll get into. We in power terms, there is a concept that is known as the PLF factor, the plant load factor that we all talk about. So when you talk about someone has set up a capacity of 1 gigawatt, someone will ask, so how much has been generated? And he will say the PLF is 80 to 85%. So for a thermal capacity, the PLF is 80 to 85%. So what that means is, for the year, the company has been able to generate 800 megawatts sort of electricity. So that is the capacity utilization, very simple terms you may want to put it. And you will see a lot of big numbers when it comes to solar and wind, gigawatts, 5 gigawatts of capacity set up, 3 gigawatts of wind energy set up, and this and that. However, one of the biggest challenges for all of this is, while that particular headline mentions that it can generate this level of electricity, however, it will not generate that level of electricity, because like we said, it is not to be generated on demand. It is based upon when the solar or when the wind energy is out there, when the sun is shining out there, and things like that. Now, if I just look at the solar thing, out of 24 hours, the solar electricity through the solar modules can be generated only between 9 to 5. That is when the solar energy is usually generated. So that brings down your plant load factor or plant availability factor, PAF, as they call it, all down to close to 50 odd percent. Add to that mix the whole thing about, during rainy season, that whole plant availability factor drops down further because of the cloudy weather that India usually faces. And your average plant availability factor comes down to a drastically 30, 35 to 40 odd percent. What this means is while the installed capacity would be 1 gigawatt, you will not be able to, on a realistically or a practically basis, you will not be able to generate more than 400 megawatts of electricity at the best of the times. Another interesting fact that I would like to share to you is we had these two cyclones which hit the east of the west coast of India in June, July, and we have a lot of turbines out there in Gujarat, and everyone would have expected because of the wind speeds, you would have a substantially higher generation of wind energy. Incidentally, as per the reports that have actually come out, wind energy capacity has reduced during those cyclones because they had to be shut down because the wind speeds were so high. All this boils down to one simple thing, that wind and solar, while they are clean, while they are available, since they are not available on demand and reliable, they can't be truly capture the entire value chain, or can be something that can become the bellwether of our energy security or power security in India. So what is the prime conclusion? The prime conclusion is very simple. Thermal capacity is here to stay for the foreseeable future. So if someone is looking at a world where you will only have solar, winds, and hydropowers and XYZ, I'm sorry, it is not going to be the case. Another interesting facet about renewable energy is renewable energy can't be generated anywhere. So if we have 27, whatever, if we have 27 to 30 states in India where thermal capacity can be installed, based upon the topographical, each state can have their own thermal capacity in a theoretical sense. However, in the case of renewable energy, that is not the case. The renewable energy can only be generated in spaces where the climatic weather pattern is suitable for them to get the highest efficiency. Because of the cost factor involved out there with the whole setup of these installations, it is very important that we get the maximum efficiency out of it, whatever it might be, 35, 40, 45% XYZ. And only a few states somehow are able to, satisfy these conditions. So very simply put, Tamil Nadu and Gujarat will always have the maximum share of wind turbines set up in India because they have because closer to the sea and the proper wind patterns that it particularly requires. These two are the only states in India where a maximum capacity of wind energy can be generated. Similar is the case with solar because of our whole mountainous regions, be it in the Vindhyas in the south, the Himalayas in the north, and things like that. It's not everywhere that we can set up large scale solar electricity projects. What this truly means is, okay, fine, I'll generate my electricity that India wants, but my use of, or the usage of my consumption of my electricity is not going to be in the same place. So for that, I have to transfer, or transport that whole electricity, or evacuate that whole electricity right from there to somewhere where it is getting consumed. So just how we have the road networks and everything, we'll have to rebuild our whole transmission networks or the electricity grid supply, which is currently there in India, because it is generated in one place and it has to be consumed in another place. One unique challenge with electricity, unlike other goods, is you can't store it. Okay, I can generate on, I'll keep it there and then I'll take it. No, it is generated, it has to be immediately evacuated. That is why we use the term evacuation. We don't use the term storage or things like that. So immediately once the electricity is generated, it has to be transferred. So there is something known as the stability of the grid which comes into picture, and that is where the whole ecosystem needs to be rebuilt to work around with this whole renewable energy capacity out there. So these are the reasons, or these are the points that I wanted everyone to draw out here. That it is not just about renewables in the whole space. Understand the entire value chain. Try to figure out what and how things are working, and then one can look at it. Having said that, renewable energy is the focus of the government, is the focus of corporate India, and has been rightly so. And what that means is close to 60% or 70% of our new energy capacity, which will be installed till 2030, is going to come from wind and solar. and the remaining will be coming from thermal in order to, stabilize the whole grid to provide that, what I would call the stability and the reliability factor into picture so that, we don't have blackouts, we don't have, issues with our electricity supply. Incidentally, India has already reached its peak demand and peak, our demand, daily demand, this last week or I think last month, already twice this year, I think once in July and once in August, if I'm not mistaken, we have breached our highest daily electricity consumption. I think it is currently standing at 235 gigawatts, something like that. That is the, I don't know, 23, yeah, it is 235 gigawatts sort of a figure, uh, which is getting consumed on a daily basis in India. What this only means is we are already entering in a situation where demand is outstripping supply. And we have not even started with the whole manufacturing setup. We have not even started with the whole EV revolution that we are talking about and things like that. So a lot of this capacity has to be installed. It has to be installed on a, sort of a war footing. And that is where we get into the macro picture of power demand in India, power supply in India, and is this a secular theme that will play out over the next 4 5 years? Is it a cyclical thing which will die down? There are a lot of bad assets. Bad assets have got created. These are the challenges. There is no profit pool. There are no profits. Things like that have been discussed in greater detail. I'll stop here, Prince. I'll probably take a break, see if anyone has a questions on the macro picture, on the technical parts of it, or then we step further into greater detail on the policy and how things are working in India and why the space needs to be looked at in a big way in the years to come.
Right, Dhruv. So for our attendees, so whatever discussion we had till now, if any questions, Kaushik, if you have any question, you can also chip in and ask question. And Dhruv, like after this, we'll move on to like which pockets cover which part of the power and energy sector, right?
Yeah, 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 yeah.
Okay, okay. So I mean, there are questions in the comments, but again, I think those will be covered when we discuss about the. There is one asking sodium ion batteries are taking advantage over lithium ion. How this technical conversion impacts selection criteria of energy companies?
Got it, got it. I'll certainly try to cover that whole part.
So if you have like you can continue Dhruv as and when we get the speaker request,
Sure.
we'll come with the questions, right?
Done, done, done.
So
So,
Kaushik, you have questions at this point in time?
Just a small question. It's
Yeah.
connecting. Hey, hi, bro. How are you?
hi, hi, hi.
I just wanted to understand also on the meters segment. Transmission
Yeah,
meters have been like one of the government is focusing a lot on the north west and all, right? Northeast and northwest side. So how about this sector, this side also? Because if someone is using electricity, he need to be calculated on it, and because the government is the only supplier of electricity for a retail public. So if you can touch upon this point also, it will be helpful.
sure, 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 certainly. Yeah. So what is happening in India in terms of the whole energy mix? We are speaking about the smart meters. We are talking about the whole ecosystem in terms of NTPC and everything. Before that, let's figure out why people have burned their hands and what happened and why no one really wants to look into this and why we feel that, So first, let's rule out all the scars that people might have regarding this. So before the pre-industrialization period, you had these DFIs or the development financial institutions, namely IDBI and ICICI, which were government owned, which used to do the whole project financing business. Now let's understand, we are not talking about coal or renewables at that time. We were talking about heavy industries in terms of thermal power, which required close to 6 years of financing or setup even after once all the approvals in place. So even you have all the approvals in place, a thermal electricity capacity requires 5 years to be built from scratch. So that is the level of timeline that you're looking. Then you have the whole PPAs or the power purchase agreements and things like that. And that is so probably after 8 years after you sanction a loan, probably your first cash inflows for a power plant will come into picture. So what this means is you had an asset liability, you required an asset liability match out there for you to really finance these long term projects. And before the pre-industrialization period, these DFIs used to do this job where they didn't have any liability mismatch because they were all long duration projects and long duration financial institutions, and they could easily finance it. What happened after the pre-industrialization period in the 1990s and early 2000s is these DFIs got converted into banks. And then we didn't really have the DFIs in the early 2000s as such. What this led to is the banks really being the only source of capital that was there out there to build any sort of project in India, be it short term, long term, and things like that. And not a lot of expertise was available because that expertise got scattered once those DFIs got converted into banks. This led to the whole problem where you didn't have businesses which were very clear, and India was just opening up, India was growing, and we had the first phase of growth and things like that, and everyone started putting up. And the whole 2003 to 2007 bubble, people thought the demand will keep on coming and coming and coming, and so people set up the capacities. And post the whole crisis is when once the interest rates were cut by RBI at that particular point of time, is when people really looked into it even again further. And you had all these people come out there and build the projects. And there is a small story of why you had so many people investing in the coal power projects. It was very simple that there was one company which set up a power plant, and it was able to recover the entire capital that it had deployed in just one single year. So the payback period for a thermal power plant, which was invested over the 5 years, was just one single year. That is what drew every small and big corporate house out there to the market to set up and set up their own power plants and probably use it for captive consumption. And you had all these policy paralysis out there, and the policies were not, because even the government was trying to understand how to open up it to the private sector and let the private sector also participate in this. And they opened up the hydro sector, and there we had NPAs in the coal and everything. And the whole PSU bank fiasco played out, and we all know about it, what happened over the last 10 years. What you are seeing now is very simple. You're not seeing every person. One thing is the worst, or the people who couldn't survive this whole drought, of the past 10 years have really vanished. Either they have been into NPA, they have been liquidated, and the whole value chain, not just the generators, the distributors, but even the product suppliers and everyone, they have vanished from the space. So only the people who have been able to survive are the best and the fittest in terms of their balance sheet capacity and their working capital model, the robustness of their management, whatever you want to call it. Because over the last 10 years, there has not been a single conventional source of capacity which has been installed by the government. So, you don't have any thermal capacity or the hydroelectric capacity which the government has announced in the past 10 years, because one, there was some sort of supply, excessive supply, you may want to call it, that played out. Then COVID hit. COVID took away 3 years of our period in terms of policy, development and things like that. And now we are at a structure where we are already outstripping our demand. So supplies or demand is already outstripping supply. So that is the broad framework where we really get into. What the corporate India, the banking institutions, RBI, and the government at large have realized their problems, and they have developed a framework in which they want to build. And at the same time, as we had touched upon in the early discussion, this is not a India specific thing that is happening. This is a global theme that is playing out. Climate change, you may want to call it whatever. You are talking about a global theme. And that is where, you have this whole global capital, which also India is trying to source in order to finance its green transition or energy transition, as we want to call it. So in all of this, how is this going to work in the whole space? So we will have a particular, company which will be out there, which will be financing this thing. Then there will be a generation company which will be setting up these projects, and those projects will be supplied to EPC players. The EPC players will turn it around to the product manufacturers and things like that. So that is the value chain that we go. But before we delve into this value chain, we need to understand how the power space looks like. Like the power space is basically divided into three subsegments. One is the generation segment, one is the transmission segment, and one is the distribution segment. Very simply put, the generation segment basically means, as you may rightly know, the generation of electricity or the generation of power or the generation of energy, whatever you want to call it. So, it's like a manufacturing plant, you may want to call it. The manufacturing plant is there. Then comes the distribution part, which is so what all the companies are there in the generating space. You have the NTPCs, the NHPCs, the SJVN. You have your if you have to look at the private side, you have Tata Power, you have JSW Energy, you have Torrent Power, things like that. These companies get qualified into the generating space. You then have the whole transmission space, which is okay. So now that the electricity is manufactured, we have to transport it. So the whole transportation project process, which you would call, which is probably a railway track or a road. In this case, it is wires. Is called the whole transmission setup. And once the electricity is transported, it is consumed somewhere. So that is what is called the distribution setup. So okay, so if it is generated in a a local place out there, from there it is transferred via wires. It comes on the outskirts of Mumbai, and from Mumbai it is transferred through small wires and small towers to our homes out here. So that is what we call the whole distribution setup. So these are the three broad value chains that you need, three broad subsectors in the whole power space, which one needs to categorize. The first thing one should always do is, where does the company fit into? Whether it fits into the generating space, whether it fits into the transmission phase, or whether it fits into the distribution phase. Once we are able to categorize, you will have a broad picture of what you are really looking into. So in the transmission space, you have companies like Sterlite Power, you have Adani Transmission, you have Power Grid, and things like that. And then on the distribution side, which is more like a sort of a B2C, you may want to call it CSCs there. You have Tata Power again, you have Adani Power, and you have Torrent Power to some extent. So and GSW Energy is actually not there. So these are the four players which are there both on the generation as well as on the distribution side. So this is the broad spectrum of the electricity ecosystem in terms of the generation, transmission, and the distribution system. Then you have the product companies and you have the service companies, or you may want to call it the EPC companies, which is what all products are utilized in this whole ecosystem, the equipment, the manufacturers. Just like you have the auto and the auto ancillary, the auto would probably be these power sector companies, and the auto ancillary will be the people who will provide the spare parts to setting up the generation of electricity. So you have the solar module manufacturers, you have the transformers, you have the switchgear companies, you have the conductor companies, you have the wire companies, you have the tower companies, and things like that. Battery storage solutions, the EPC players who will set up. So some of the names in the production companies you may want to look at is probably Apar is there, Voltamp is there, Sterlite Power is there, who will supply the wires. Conductors are supplied by Apar. You have Schneider Electric, which supplies some of the transformers and things like that. Switch gears companies are there. So these come under the production space. The EPC players are Sterling and Wilson is there, who's doing a lot of EPC out there. Then you have the whole, what I would call Techno Electric, which is there, which is another EPC player out there. And a lot of EPCs even carried out in-house. So you have the tower companies like KEC International, you have a EPC player like Kalpataru, and things like that. So this is how the whole ecosystem looks, right? And even there are some unique cases like in the IT space, Sand, which has a substantial portfolio of its of its services in some space or the other related to the whole energy mix, because there's a lot of technological development or industrial technology that is also going to be utilized in the whole power space to make it more efficient, to make it to reduce the losses in a big way and capture it. So going back to the whole value chain, so what the global economy really wants is, the global economy or the global world leaders, be it the World Bank and the policymakers, they are like, you give me a particular entity to which I can funnel my resources, my capital resources out there into your energy transition. I don't want to go and speak to 10 people out there in India. I want to speak to one particular person out there. So that is why you will have to set up a nodal agency in India, which can probably be PFC, REC, which will raise these dollar bonds out there in the form of green finance at a lower rate and things like that, and then funnel it out there and supply it to the generating companies like NTPC, like SJVN and HPC and likes like that, who will in turn set out orders. Okay, fine. Now I'm going to build up, say, a X particular amount of capacity. So who will build that for me? So you'll have players like an Sterling and Wilson or or Techno Electric who will set up these, will do undertake the EPC player or EPC contractors, and these people will earn and go and contact the product companies, namely APAR, namely Voltamp, to try and namely Vari, specifically in case of solar, to try and capture this entire product value chain out there from them. So this is how the value chain will progress. One important thing that you will see is, and which one of the reasons why a lot of companies in the early 2000s or the 2010s failed is they didn't have the balance sheet size really to try and finance these projects. Everyone in the country now realizes that these are all long-term projects which require substantial cash flows to be invested in them upfront for you to generate substantial cash flows in the foreseeable future in the years to come. But the primary requirement that is going to be there is going to be having a balance sheet size which can generate a cash flow which can then be deployed in setting up these capacities. So you no more have any small companies announcing even today, that I want to even set up a solar capacity. You have all the big players. So the generating capacity is only being set up by the likes of Reliance, energy companies like IOC, BPCL, and likes that, or LNTs of the world, NTPCs of the world, power grids of the world, NHPCs of the world, because they have the balance sheet size really to go out there and set up these capacities. Very simply put, if I look at NTPC, two of the biggest advantages that these companies have and why PSUs have been back in flavor and why PSBs are back in flavor is PSUs by default have the lowest cost of capital out there in the country. Because of the government backing, they can raise loans at as good as GSEC rates, and the lowest cost of capital will always be in such long-term projects which are running into years, at least 10 odd years sort of a duration to set up. So when you have such long duration projects, you really require a strong balance sheet. You really require low cost of funds. Only then you will be able to somewhat survive. And NTPC has the balance sheet strength in terms of the existing assets, the cash flows of which can be invested in generating these new assets, which are of strategic importance. So, for example, if I have to give you, NTPC, when started in the year 1960, 1965, they had set up a thermal power plant, and that thermal power plant was set up with a shelf life of close to 25 odd years. It has already been 45 to 50 years, since the plant was set up, and the plant is running fully, functionally, perfectly fine at not 80% but 100% plant load factor. So that is the kind of stress test that thermal electricity generation has gone through over the years. That stress test we don't have the case with solar and wind. In the years to come, that stress testing will be done, and we'll come to know whether what is the life shell of these renewable capacity. But going back to the whole NTPC example, so when you set up in your books, you would have depreciated the whole thermal capacity over a period of 25 years, and now you are at 40 years, you have zero depreciation for whatever is getting generated out there. At the same time, for the first time in the history of NTPC, the actual setup or the installed capacity that was done by NTPC in the year 2022-23, the renewable installed capacity that the NTPC has done over the past 1 year has exceeded the conventional capacity, which is a thermal capacity which has been which has been put up by NTPC. Now, what one unique feature about the renewable energy capacity that has been installed is that while a thermal power plant will take close to 5 to 6 years for it to be set up and start throwing cash flows for you, in the case of a solar or a wind, it will take maximum 2 years for you to set up a solar or a wind farm, and it will start throwing cash for you. So your asset turnover ratios will suddenly jump up by 2x. Like conventionally, it was 5 to 6x. 5 to 6 years, it has come down to 2 to 3 years. So you can keep on reinvesting capital at least twice compared to earlier terms. So when you look, this is the intricacies that you really go and try and dig in detail, uh, you know, to try and understand a particular power generating or a power company in greater detail. You will also have to look at working capital cycles, the project financing cycles, at what rate is able to, price his debt. Because, for example, there is a transformer company which just wrote in their annual report that the project financiers or the people who are, giving out these orders, they are asking for close to 2 years of debtor period or debtor days. Or for a small company, it is always going to be difficult to finance that sort of working capital needs. So you really need to have strong relationships and a strong standing in the market to really try and work around with your working capital needs. Otherwise, the big people will certainly be able to cost you out of the order book of the competition, because they will have a lower working capital cycle, they will have a lower cost of funds, they will have the balance sheet size. So either you have to come out with an excellent and efficient technology or working model or quality or whatever you want to call it, but you really need to have your moat. But when we are looking at companies, and that is where I said that, while orders will be given out left, right, and center over the years to come, and I'll explain you in greater detail again why. But it is very important that one focuses on their profit pools if one really has to look into these power companies. Coming to the whole spectrum of what we are looking at, and again, the whole 5, 6 year or a decadal time period that I'm looking at, the government of India has recently announced that whole RDSS scheme where they have focused on reducing their whole distribution and theft sort of they want to reduce the theft or the inefficiencies of transmission electricity which is getting transmitted over the period. And at the same time, they have announced a capital outlay of close to 1,50,000 crores for uh, setting up the smart meter thing, which is the talk of the town. Now, why the government is doing this and what is the thing? So, as we know that why solar and wind are not going to be there, whenever we want, it is very important that we set up some sort of discipline when it comes to, consumption of power at the end of the consumer. So everyone is trying to, with the help of technology advancement and AI and whatever you want to call it, everyone wants to really figure out what sort of electricity is consumed where. So based upon the data that will be gathered, that is how your pricing of your electricity would be done. And with the thermal capacity, you could, because there was a lot of initial capital outlay that used to go to set up a thermal capacity, you required those long-term PPAs in order to finance them and and set up the good IRRs for yourself over a period of time. But with the short duration of solar and wind energy capacity and the inflexible nature, long-term PPAs don't really help anyone. So you will go into short-term PPAs, you will go into exchanges, where you will trade in electricity capital, and that is how the price will be discovered from time to time. So you won't have a fixed price of electricity for a consumer, but it will be majorly fluctuating price probably that you might have to pay. So that is where the whole ecosystem is trying to get created by the government. This is just 3 lakh sort of capital. However, on the generation side, with the whole energy capex that we are talking about, there is close to 15 lakh worth of generating capital, which will be which is coming and which is getting financed to generate the sort of thermal, hydro, and renewable capacity that will be put up out there in the country. There is close to 1 lakh crore of hydroelectric power projects which are already announced by the government, and there are close to 2 to 3 lakh crore of uh, you know renewable projects which are day in day out getting generated every now and then. So this is just on the generation side. So on the generation side, we had 15 lakh crore of the power projects which will be set up over the next 10 years or so. We have this 3 lakh capital outlay on the distribution side, which is there. But in the middle lies the real thing, which is what we talked about. Like we might have the renewable capacity and everything, we will have to relay the whole grid. The grid in India is somewhere close to 60 to 70 years old, and it is asking for, relaying of those transmission lines to make them more efficient because of the technological advancement and because of the wear and tear of the of the equipment. It is going to be important for you to replace this particular whole transmission line, and which according to me is going to be the biggest capex out there that one can really try and capture. And in all these three spheres there is going to be a profit pool. So we I've already outlined close to 15 lakh crore of capex which is there, but the transmission capex is going to be in bits and parts, and it is more state driven because the state discoms will have to relay their whole state lines, and while power grid will be the nodal agency for all of it, and while we have a national grid in India, it is the states which state it comes which will lay out that capital, and that might not be too much coming out in the market in terms of that. But what is certainly coming out is the HVDC projects, the high voltage distribution corridor projects, which transfer electricity close to 800 900 kilometers out there, on the ground, and which every year government is going to come out with one project for the foreseeable future, and each project cost is going to be somewhere in the range of 30 to 35,000 crores. So for one simple example, the you would have heard that the biggest HVDC projects is going to come up in Leh, which is on the priority list, because Leh is where a lot of land mass is available to set up that cheap solar electricity modules and generate that electricity. But Leh doesn't have a consumption pocket where so much of electricity will be consumed. So you need an outlet for that solar in electricity which will be generated out there, for it to be transferred probably to the energy consuming states of nearby like Punjab, Delhi, Rajasthan, Uttar Pradesh, where this particular electricity will be consumed. So in a very brief, I have probably explained you the whole thing about what I'm trying to tell you, that unlike with thermal, in case of solar, just sorry, in case of solar, it is not the place where it is generated that it is going to be consumed. So it is going to be certainly in a different space. So with all of this is the sort of project capital that I'm really looking at when I talk about transmission capex. So when we are looking at close to 16 to 17 lakh crore of this capital, we are looking at a sort of 5 to 6 years timeline where this whole particular sector is going to generate a substantial profit pool, and we have to just try and capture that profit pool and play the themes accordingly. So you have to go and figure out where the first profit pool will be generated. So while the order will be given by NTPC, the NTPC is not going to generate its profit, say, for the foreseeable future, or for that matter, an NHPC or SJVN who are going into the hydropower projects, because that hydropower capacity is only going to come up 6 years or 7 years down the line. So that is where it will start getting reflected in the profit pool or in the profit and loss account of the company. But where it will get reflected at the immediate future once the money is dispatched is going to be these product companies, be it the meter companies, be it the transformer companies, be it the conductor companies, or their suppliers who are going to be those special steel tubes or chemicals, or whatever XYZ, or the oil lubricants, whatever you want to put it, is where the real value will get captured in the year one. From year one, in the year three, probably it will get captured in the EPC players because they will start building this whole capacity. And from year five, probably it will get captured in the generating or the people who have announced this capacity, because they will start generating electricity and it will get reflected in the profit. But there are one set of companies for whom the meter starts from day one, and that is the financing companies. So your likes of PFC, your likes of REC, the public sector banks who will be the major source of capital funders for all of these projects, for them the meter starts immediately once they have given out the capital. So they will be the strongest tailwind, or the place where the whole project is getting laid out. So they will give you the broad eye view of what sort of capacity is getting laid up, and accordingly you can play out this theme in India. Globally, India is one of the countries where we have a national grid. One of the few countries, I would say, we have the national grid of electricity, and we are in process of building a national grid for gas. No developed country today has a national grid. What I basically try and mean to say is, if you are in New York and if the electricity is getting generated in New York, you can't go out and get sell or transmit that electricity to Texas out there. It has to be consumed within New York. So the US does not have a national grid where you can transfer that electricity easily. Secondly, the US is still on wooden poles. and they really require and need to upgrade their technology, which they are doing through the Inflation Reduction Act. So if you are looking at 15 lakh crores in India, you can just extrapolate and look at what is the global energy or the power capex that one's looking at. I think I read it in the APAR presentation in a couple of days back. The number they put it as is somewhere close to $5 trillion of total power capex that we are looking at over the next 5 to 7 years. So when you look at companies, also don't just look at companies who are just purely India focused. Look at companies who are talking about exports in some sense, because even if you say okay, tomorrow India derails, the India power story derails, you have a global story which is certainly going to play out its course, because what we are seeing today geopolitically in terms of energy security that everyone is going through, no one wants to rely on each other. So in that space, that is where the whole global theme stands. In terms of hydrogen, in terms of the sodium ion cell and everything, these are still 3 years away from actually generating any sort of profit pool for anyone. So I would really recommend you to hear what Mukesh Ambani said yesterday on the whole ecosystem, how that is going to be played out, and also the PAR con call, which is close to 3 hours long. You may want to try and hear that out and try to understand the global theme that is playing out. But hydrogen is currently pilot green energy projects. We are still some time away from a hydrogen being actually used as a source of energy on a day-to-day basis in our daily lives. So I think so that space is still evolving. There is not too much of an excitement. And like I said, because this is driven mainly by the people who have strong balance sheets, you'll have to focus on the PSU space. You have to focus on the likes of RIL, L&T, and people like them who are actually investing in this ecosystem, because you don't have small product players out there who will be supplying to them. I think that is a brief monologue that I would like to give on this. I think we can open the floor to discussion. uh, if anyone has any input to share or any questions, I'm happy to answer them.
Yeah, Dhruv, that is not brief and that is very detailed, and I appreciate for that. And guys, like for our attendees, Dhruv deserve everybody in the spaces should follow him for his great insights. And I see Shekhar and Ravi Bhai also, if they are free, they can chip in for some set of questions to Dhruv. So Mahendra is one speaker. You can unmute and ask your question, please.
Uh, Thank you for giving me a chance, sir. And first of all, really, sir, Dhruv, sir, your energy is super, really. I think you talk continuously more than half an hour, and this is very commendable. And now my question is there, sir, as you said earlier, so how much dependency on thermal power plant will be, how long we will sustain on it, sir? And second thing,
I
yes, sir, you were saying something?
No, you may complete it.
And second is things, as you said, sir, this all solar and wind energy don't have that much capacity to fulfill all the demands, and that must means efficiency. And another one is hydropower plant. So hydropower plant we really don't have that much. First of all, we need a more that geographical structure on for hydropower plant and water reservoir, which is also not that much. In that large capacity we have, so which can be sustain our energy demand. So how long means all this EV and green energy things is going on in all part of the world? Is it only a myth, or we are is it the only myth that we are getting from all the business houses that in the future green energy is there and it will fulfill all the demands, or just it's only nothing, just a buzz?
Yeah.
And how? Yes, sir, complete
So,
that.
so, yeah. So, on the first question of how long fossil fuels are going to be there in our energy mix, I certainly see, if you ask me today, for the foreseeable future, because the grid stability will go for a toss if you don't have fossil fuels. So, thermal capacity will remain the sort of backbone that will be there for energy security for any country across the world. till the foreseeable future, till the time we find out another source of energy, which is, which can try and replace in terms of reliability and availability on demand. But since the climate change and the whole has become so critical, and the geopolitical challenges thanks to the Russia Ukraine war on energy security has become so critical for all countries, they are really transitioning in a very big way, and that is going to happen. It is not a choice. That is why I said I'm not worried. Even if governments change across the world, this is not something that someone can just brush aside and stop investing in, because this is something that is a need of the hour. So it is not something that you can bury under the carpet, for something else. And the whole theme, you can I see a lot of people focusing on China plus one, on chemicals, this and that. That all thing is not going to work till you have these energy security. So you can't have a chemical plant till the time he doesn't have a power supply which is there, which is reliable, and which is available to him. It can be captive, it can be anything, till you have a dependable source of supply which is which is cost effective and which is reliable. You can't have a manufacturing capex in any country. So that is certainly not happening. On the space of hydrogen, as in more and more we speak to technocrats across the world, and in India, hydrogen really looks to be certainly the fuel of the future. They have really cracked the code out there, and that is the hybrid model. That is why I just explained that they want to use the electricity through the renewable capacity, because like I said, because renewable capacity cannot be set up everywhere. They can convert that electricity into hydrogen and transport that hydrogen through green ammonia or fuel cells or XYZ. So there's a lot of development out there, and somewhere in the laboratories, they feel that, this might be the answer where, we can change our energy mix, which has stayed stagnant at oil for the past odd century or so. So hydrogen is certainly, or some form of green energy is certainly going to be the future. What and how, what shape? It is not going to be just like you don't have a one world order. We talk about multipolar order and things like that. Even in the energy space, it is going to be fragmented to some extent. It is not going to be a particular one source which will drive the demand in the foreseeable future. In terms of the hydropower capacity, it is currently at 11%. I don't expect it to be more than 20% because they have those security challenges, and it takes a really long time to build a hydropower project, and takes a lot of technical, skill set to really build it. So it is not going to be a very big supplier of electricity, although it will be a source because government is focusing on it in terms of development and things like that. But source in that sense.
That's what, sir. Because hydropower plant has lots of challenges. Even this power generating and power distribution losses are so much there in hydropower plant.
Yes, yes, absolutely true. So it can't be the dependable source. It will be one of the sources, but it can't be the only source. That is the way I'll put it.
All right. So, Ravi, any questions or any inputs from your end?
I'll join a bit later, and I'm having dinner. I'll join back.
Sure, sure, sure. So, Kaushik, any further questions, or shall I read out questions in the comments?
Prince, one last question from my end. I just wanted to understand. You would have seen 2 days back we had one of our solar cell manufacturer coming up with their annual report. If you had gone through that, they have actually mentioned that the technology, how it is working, and what the kind of consumptions that India is actually looking on,
Hmm.
and the kind of export orders and the kind of module manufacturers are coming up with their order book, right? It looks
Yeah.
like the cell is going to be a very big theme for them, because without cell the module is no use, I think so. So any view on this side you have it?
Yeah, yeah, of course. So again, like what Mukesh Bhai spoke about yesterday, you look at him. I mean, from glass to silicon, from silicon to ignores, from ignores to wafer, from wafer to cell, and from cell to module. That entire value chain, he's building it in house. And you can't have just one part of the value chain. You need to have the complete value chain, and then the module gets prepared and that it is laid. So it is certainly a big capex even internally within solar. I don't completely deny that. But always look at the big picture and then see what you want to play and how you want to invest and play around. But the end of the point conclusion remains that it is a secular theme which is there for the foreseeable future, which remains unaffected even by interest rates, because fiscally it will be driven. It is driven by the governments. It is not driven by private players or anything. It is a policy push which is there by world leaders across the world. So, interest rates or anything, this is going to happen. People are going to make profits out of it. Who is going to make how much, that we have to figure out, and that is how we can make our money.
Thanks. Please, you can go ahead.
Right, Dhruv. So, Dhruv, there are few questions in the comments. I'll read it out. So,
Sure.
yeah, one question is onshore versus offshore wind plants, advantages and disadvantages.
I think we have not got into large scale offshore wind farms as yet. So currently it is all on land. I don't really see any offshore big wind farms being set up. What I'll suggest you is, you can follow China for this, because China is way ahead in all of these technologies. I think China is the one where they set up at least the floating solar plants, but certainly not, on the wind side. I am not too sure. It has been set up in a big way, certainly in India. Probably globally they are trying out. But yeah, there is a policy push around it even in India in that sense. So we are still on a development phase. We are in the lab space, I would say it.
Right. And one question is from Aditya. He's asking, sorry, can LNG be used as alternative for generating energy, replacing coal-fired power station? Do you see this happening in future that government announces some policy for this?
Yeah, so gas as a source of energy is even there today. It constitutes close to 2 to 3% of our energy mix. But unfortunately, we are not, we are importers of gas. We are not manufacturers of gas. We don't have too many gas reserves out there in India, and because we are importers of gas, we are used to the fluctuations in the gas prices. So even currently gas becomes economical as a source of electricity at close to $2 to $3 MMPTU. Currently the price is hover somewhere close to $6 to $7. So currently gas is only used to meet that peak power demand which I spoke about, the daily power demand of 240 gigawatts. Wherever you face that little bit of supply mismatch, they are trying to use gas just to close that gap between 99 to 100%. So gas can't be a big term because unfortunately we are not generators of gas in India. But for globally, someone like Russia who generates a lot of gas, or someone like US who generates a lot of gas, they can look into it. But it is somewhere in that gray hydrogen space because it's not completely green, but it is certainly a stopgap arrangement, you can call it that way.
Another question is what are the main hurdles in case of power generation, power transmission, and power consumption?
I
I
think
think we discussed, right?
Yeah, so policy is going to be the biggest hurdle. Land is going to be the biggest hurdle. I think it's all about it. Technology wise, it's all there. I think the hurdles are how fast and how quickly you can do it. And for that, you require the policy push, which the government is doing. You require cheap source of capital, which PSUs and the world leaders are ready to provide. So not specifically any hurdles that way, apart from land acquisition cost, you may want to call it, to some extent in the case of transmission, but not really anything else.
Okay. So next question is from Nafas. Is how do you see countries cooperate in green energy? Example, UAE, India plan to integrate their grid to efficiently utilize solar energy in peak times, and also countries of the likes of Singapore planning to import G energy. What is this? G energy B from Australia, India, etc. Even they have enough thermal power energy.
Oh yeah. So thanks for asking this particular point. I forgot to speak about. So when the Prime Minister Modi met Elon Musk, he made a very interesting statement out there. that close to 1% of our land mass is enough to generate solar electricity for our consumption today. So what that means is we have a strong land mass. Like unlike other countries, we have the strong climate, or the most best climate, I would want to put it, to generate solar and wind energy or renewable energy in general, which not a lot of countries have that. And if we are able to do that, then after consumption for ourselves, we'll have a lot of electricity to export. So 10 years down the line, we might, if you look at really optimistic scenario, we might look at exporting electricity on a policy level, and from a geopolitical strategic point of view also, uh, they are looking at it as a soft, power to try and pitch to countries. So for Singapore, if you look at Singapore is a landlocked country, they don't really, even if they want to, they can't really go up and set up too much of, renewable energy out there for themselves. So they will have to look at either innovative ways to set up the generate that electricity, or they will have to import that electricity for themselves. So having said that, that is where they want to try and pitch into and set up a transmission line, just like you have optic fiber lines running across the oceans connecting continents. You will probably have sometime in the future, transmission lines which will transfer electricity from one country to another, and this is really happening at the ground level. Although it might look at a very far-fetched idea, but you really need to start planning now for if because that is how you will end up pitching your solar capacity. So you might have Singapore just coming out and financing the entire particular solar park, and they will be like, okay, this solar park belongs to me. I'll take away all the electricity that is going to be generated out here through the transmission line, which is possibly passing through Andamans and Nicobar Islands. So that is truly on board. There is a lot of development happening around it, but that is still really far away. First, we really need to figure out our internal picture.
Right. We got one more speaker. Rahul, you can unmute and ask your question.
Yeah, just wanted to ask that how do you see the regulatory costs, especially in the fossil fuel based energy and power sector? For example, coal cess, which is placed because of which Coal India never goes up, or for say the fuel gas desulfurization, which was imposed on thermal power plants. So, how do you see the regulatory costs going ahead in this sector?
So regulatory cost, so that is where you have a lot of these. So regulatory cost will be there. So in terms of for Coal India has to be, so the way the Coal India can really make its money is try and produce a lot more coal. Because if you want to keep costs in check in terms for us as consumers, they'll have to work around out there to cut down the cost of coal and not keep it market linked. So the regulatory cost to some extent will be there, but the FGD thing that you just spoke about is more to do with the climate change and upgradation of plants, which is certainly a good thing in a way, because that is going to be there. But the new power plants which are getting set up, they are working on a lot of emission norms for those new thermal plants, and I think the new thermal capacity which will come into picture is somewhere in the range of 25 to 30 gigawatts is what is planned. We are not planning for a lot more, but like I just mentioned, thermal power plants have proved the test of time, and for 40 years, you are able to generate electricity. So, even if here and there the cost changes, I think the IRRs won't change much. And because they are for sure, there is no one who is on the private side who is going to set up a thermal power plant. It is going to be majorly PSU driven. So really profit and IRRs can take a little bit of a backseat. But in the larger scheme of things, money will be made out there.
So my point was just that this is the capex which does not lead to any additional output. This is pure regulatory cost. So I mean the margins might be impacted for this sector going forward as global warming and all these theme takes more importance.
So on the regulatory side, the current thing that you just mentioned is the FGD thing for thermal power plants. Apart from FGD, there are no. So if you are looking at probably a green tax on thermal power plants, I don't see that is happening because thermal power plant will remain the mainstay for at least the next 5 years till the time solar and wind capacity in terms of the generation of units catches up. Because till that time, the thermal capacity will remain. And like I said, the IRRs for them really will work around on how able you are going to be in trying to capture the cost. So even today, NTPC, in spite of all these regulatory costs, has been able to generate substantial profits for itself. In spite of whatever, you look at the working capital mix where the discoms were not paying them and things like that, they have been able to maintain their IRRs to a certain large extent. And the reason for that is they have been able to cut down on their cost of capital. They have been efficient in setting up these plants, and at the same time, these plants have a long shelf life. So profit will be generated, regulatory cost will be there, but they are not they won't be abrupt like you have the windfall tax here and there, which gets levied on the oil companies out there. The FGD thing has been placed long back, and every 2 years the government keeps on giving extension to it. Probably this was the last extension which has been given to them. But FGD is not something which came abruptly for them. It was they knew about it and they themselves were planning. And now the companies are even more proactive. That is why they are diversifying away from thermal, and you have the whole NTPC green being set up. They are investing in new technologies like ethanol blending, hydrogen, and things like that. Because no one company wants to rely on one source of power. They all are diversifying that pool of power generation.
Okay, understood. Also wanted to check your view on the distribution sector. For example,
So,
CESC and Torrent Power are bidding for new distribution circles. So, I mean, what are your views on that particular sector?
so distribution sector, you'll have to really look at it more like consumption story. So just how you will probably work around with the consumption basket of an FMCG. Don't point me light to light, but you'll have to look like what sort of growth will. So per cap, so there is just like you have a per capita capital like USD terms you talk about. There's a per capita data consumption. You have a per capita electricity consumption also, where India is similarly very low compared to the global average and US. So the distribution company will be betting that your distribution capex, the distribution or the electricity consumption by consumers will keep on increasing as you have more ACs, more televisions, more modernization in houses. There are still a lot of slums and houses which are working on no electricity. Once they get, the last mile connectivity is there to these homes in these villages and everything, there will be a lot of consumption in terms of data, computers, this, that. So they are betting on that. They are more stable cash flow oriented companies where they put up the capital today and for the foreseeable future they'll be able to earn. But there the policy stability is there because they are trying to move them from the long term PPAs to the short term market of IEX. So that transition is happening out there. But these are all discovered companies. They are all big companies and they will be the ones who will be there. So you won't have any new entrants. So in a way, it is sort of a monopolistic or oligopolistic industry that you are talking about.
Right. Ravi, you
Okay,
had
thanks.
your hand raised. Thanks, Rahul, for your questions. Yeah, Ravi.
Yeah, thanks, Prince, and thanks, Dhruv. It was actually very extensive discussion. Uh, I have few points and few questions, maybe few kind of discussion I would like to have with Dhruv. Few points on few of the questions which were asked. Something like how the gas can play a more important role. The problem, as Dhruv mentioned, is gas. I think presents only 6% of the energy of the country, and government for a very very long time their aspiration is to bring it to 15% of the energy contribution. For a longest bit of time, the KG Basin, where the gas was supposed to come, didn't deliver. But now the expectation is this will start to deliver. The importance of gas in terms of we were discussing in terms of managing the grid stability. What happens that if the PLF of any of the thermal power coal-based power plant goes below 40 to 40%, then it has to be supported by burning oil, and then the cost of the whatever maintenance of that thermal power plant also goes up. While gas, the PLF can be increased or decreased at a shorter notice, and hence when we are thinking of moving the country towards solar and wind, gas. The problem we have is gas is not easily available within the country, and then we have priority towards fertilizer and CGD. I'm not sure whether power is a priority sector in terms of consumption for gas. But if we have that availability of the gas on a higher percentage, it will be easier to manage the grid stability if we have renewables as a contribution. Their contribution grows higher and higher, and maybe also support coming in from smart grid. Apart from that, we were also discussing about importance of increasing importance of solar. Now, what new phase India is witnessing is apart from say wind solar, which is a combined project, they also are talking about RTC, which is round the clock power supply from the renewables. So small, something like small pondage will be created where when the power is generated, the water will be taken to a higher altitude, and during the evening time when solar is not available, water will be running down, and hence the electricity will be generated with the turbine. So this might increase the cost a bit. I guess what I heard is a single megawatt will cost 8 or 9 uh, rupees, 9 rupees, but that can be a feasible option for the country. One thing which should actually take a lot of pride for India is being a 2,200 $2,300 per capita economy, being at the stage of the economy where all the other countries were only seeking for cheaper source of power to support economic growth. What India political leadership has done is they are even at this stage are trying for having a decent amount of renewable and green power mix in our entire energy basket. Oh, I had a lot of thoughts when I was listening to Dhruv. But tell me, Dhruv, one thing: how you would think about this imposition of taxes, the import duty on cell and the solar panel? Because before that phase, the growth on the solar side was, I assume it was much higher than what we experienced in last 12 months, and the preparedness, maybe it will support the country in a long term because the indigenous production will come up, but we are still we might have taken a 1 2 year back because of that imposition of taxes, and the companies which are coming up with the plant were not ready to supply the vacuum which will be created because of this imposition of taxes. What's your view on this?
So you're absolutely right. So what happened is they had earlier placed the imposition of tax, but they had to first look at the whole policy need a lot more than focusing on few companies and things like that. So somewhere in the power circles, it was felt that the Indian manufacturer was not up to speed or whatever you want to call it, and they had to stop that reimposition because the end goal of setting up that solar power plant and everything was becoming costly, and at the same time was time consuming. So they've currently reduced that thing of so as we speak currently there is no import duty or any restriction, but it will come. So once that import duty was removed, everyone got up to speed. Everyone announced that solar module plants and everything. And I think over the year or two, I think a lot of them are in pipeline, and in the next 1.5 year, India will have a substantial, output of solar modules and the entire solar uh, panel supply chain, right from wafers, ignored cells, and everything. So then, I think the import duty might again come into picture, but for the time being, it is not there. And what really worked out for the Indian manufacturers is also that the whole US ecosystem has opened up because they have imposed strong duties not only on on Chinese but even rerouting it via Vietnam and places like them. So they have imposed strong duties out there also. So because of these two, conditions, there was a bit of dilemma in India, but I think now it is all sorted out. So there is no import duty for this particular year. Probably for 1 year more, they will keep it that way. But I think 2 years down the line, the import duty will again come back once we have enough capacity out there in India.
Okay. And also, when we were discussing about the ideal structure for solar and renewables, my thought is ideal structure is you create a chain or something like you have a transmission line across nation. Something like, say, Europe is a on a lengthwise, Europe is a very wide nation, and hence a power generated in one country in the daytime can be utilized in different country during night time, and they have this kind of single area, what you may call, where the power will be distributed among different nations. So if we want to have complete, not complete, but have a heavier reliance on solar, one idea which actually in an ideal situation government should work out is neighboring countries where you can move laterally, not horizontally, laterally, so that you use a wider presence of sun to generate that solar power. Because what has happened in last 4 5 years, solar power has become very economical, and in last 3 4 months, I guess wafer cost, I don't know what we call wafer or panel. The cost which I see on the Chinese players, they have come down dramatically in last 3 4 months. Uh, so that would be actually very helpful for the Indian country.
Yeah, yeah, absolutely. So that is what we were talking about, and someone pointed out rightly that Singapore is looking to set up, and that is where the whole policy is that, I will just set up and I'll probably export it, and through that particular money, I'll probably try and use it for imports of my thermal coal or oil or XYZ. So while I might not, use it internally, that particular solar capacity, I might, export it out to neighboring countries. So that is a particular thinking that is already there. We already have a transmission line across Bangladesh, which was just recently inaugurated. Singapore thing is working on a very fast scale, and the UAE thing is going to go via Onam. So I think first we'll connect Onam, and from the Onam it will be taken to UAE. So that is how that is going to work out. But just because of these things, they are not stopping. They are keeping on increasing and announcing these capacity additions left, right, center.
And one more thing, which I just forgot. Yeah, carry on, carry on. I'll come back. I'll come back.
Right. So, Dhruv, like, although we have plenty of questions in the comments, we'll reserve those questions maybe for a further Q&A session with you dedicated on today's topic, because I would it will allow our audience to consume the content today and surely come up with their set of questions. So, Dhruv, one bigger question is like, these companies are like what we say, require huge capital, right? And their debt structure is also, you can say, they are debt laden. So what do you think could be a best way to play this power and energy theme, maybe through ancillaries, or how exactly? And obviously we are not here to name any companies, but any pocket as such which is looking good from valuation point of view, or maybe can be studied at this point in time also.
Yeah, absolutely. So I mentioned a lot of companies, during our course of discussion on the generation side, EPC side, product side. So take up a few product companies and, you go through the con calls, and then you will see a lot of growth prospects out there. And thankfully, what has happened is while people will talk about debt and debt, but you look at any power ecosystem company, hardly 10% of them are debt heavy. List all of them are using their cash flows to, invest in growth and everything. So that is a misnomer that people are going through, that power is a lot debt heavy business and it does not generate profits. There's a substantial profit pool that is getting generated out there. So you and have a mix of all of them. So have a few large caps like generating companies, finance companies, and then you go have a lot of product companies, because that is where the first profit pool will come in immediately. Because the meters are announced, the meters are made. Now the meter will get set up, and from the meter, whatever electricity is getting generated and consumed, and the billing is done by the distribution companies that will be owned by them. So the whole value chain is working out. So have a focus on a couple of EPC companies, because EPC companies will have a big role. A lot of EPC players will mushroom, and the best of them who have been in the last cycle, they will certainly lead the pack. So focus on them, and then you have the big players of the PSUs, which will certainly light the pack. So you will have to have large companies out there in your bucket, because they will be driving the growth, and they are the only ones who are be setting up the capacities. So they will seriously make you a lot of money, even though they are large caps.
One thing to add, if I may, Prince, we were
Please, buddy.
discussing about. Hello?
Yeah,
Yeah,
please
yeah,
go
yeah.
ahead, buddy.
Yeah, yeah. What I was saying is, say Dhruv mentioned one very pertinent point that few of the lenders will have the first run towards a higher capex because otherwise other companies their clock will start ticking once the capex are being used by any EPC companies and all. But the lender is the first one where the clock start ticking right out from the amount of from the level of disbursement. Think about this, that the two large lender in this space, they are still able to generate 6-7% dividend yield when they are bringing their GNPA, NNPA down quarter on quarter for last 15, 17 quarters. So what will happen? Right now they are sitting at a pot where the GNPA, NNPA is about 5% and 2%, and still they are distributing that 5%, 7% dividend. And as the AUM grows, as that provisioning requirement on that old book comes down, the appetite to distribute dividend given goes higher from here. Apart from that, there are large companies. If you see the Genco, the NTPC, and the Power Grid, think about those companies that if you look at their balance sheet, they will have 30-40% of investment which is sitting on capital WIP, which is not contributing on the PNL side. So right now, being on a higher investment phase, you are still generating that 5%, 6% dividend yield in the both of the companies. Even if you go at a some smaller scale, if you search for companies like NHPC and SJVN, what you will discover is the capital WIP is more than the capital which has been used right now. WIP is more than 50% or 100% of the balance sheet of the net capital in use. So that tells you that 50% of the balance sheet is not being converted into PNL, and still those companies are generating you 5-6% kind of dividend yield. The problem we had is before 2019 or something like that, the PSU was discarded to a level that no one wanted to touch them, and hence whatever this value creation has happened at every level, there was some level of resistance from the larger investment investor community that didn't touch the PSU. Now that scenario is different, but these companies are still, at least if you see their valuation wise, they are not expensive on the quantum of cash flow they generate. They might be expensive if you look at and compare with 2015 to 18 kind of valuation level. But if you judge them on the cash flow, what they generate even now, and what the capex which they have already spent, then you will see that the valuation is still not expensive on those companies. Acha, I remember one thing. We were talking about the discom companies and their importance. What country is thinking about is bringing more and more private players in the discom side. What I tell you, very interesting case study. I guess this must be from Torrent Power in Gujarat. How Torrent Power was able to bring down the distribution, what we call pilferage, dramatically low in that state is instead of having a wire which goes above the road, they have planned it underground, and hence they were able to reduce the power theft dramatically. So these kind of initiative which have been taken by the private companies will definitely help in bringing down that our T&D expense. I don't remember right now, must be 18-19%, but it is coming down by 50 basis point to 100 basis point every year. So that will be very beneficial for the country. And maybe smart meter, which is a prepaid, if the prepaid smart meter is well established, then that also might reduce the outstanding dues for the discom.
Absolutely true, Ravi bhai. You mentioned because smart meters is the first port of call. Once the smart meters are installed, only then you can go to shorter PPAs, and you have the time of the day tariffs and everything that can be implemented based upon what sort of power demand is. And based upon that, they will be able to plan their renewable capacity additions and stability measures which are required. Because and what sort of gas utilization will be required, or what sort of solar or wind generation will be required. Based upon that only, it will be driven in a sense.
Actually, one more change which has happened in the last 4 5 years is earlier we used to have this 25 years PPA in the country. What used to happen, say, a discom has to secure power for their state, and we were always 5 to 7%. We used to call 4 5%. We used to call ourselves as a deficit, and 6 7% as a peak deficit. What has happened in last 8 10 years? If you see Grid India data or something, annual report from CRC, the only barring the 2021 peak time, now our peak deficit is less than 1%, 2%. So Discom is not forced to go and sign for a very long-term PPA. They are vouching for that 3 years, 5 years PPA. And another thing which has developed in last few years is whatever the short-term trading happens on the power exchange, they find it cost is 15 20% cheaper than what they are signing on the PPA side. So that is another big change which is happening in the country.
So yeah, so what had happened is when solar was introduced, it had started with 16 rupees of generation power, which currently stands at 2.5. And these all long-term PPAs of thermal are much higher. So thing of moving them to short-term PPAs and even to the exchanges, they won't be able to have a lot of debtor or creditor days out there. They'll have to start paying immediately if they want more power. Because in the long-term PPAs, both of the parties were bind. So once you have a short-term PPAs, you are out of the system and you'll have to renew the agreements. You can keep on changing the tariffs you want, and that is where the whole smart meter and tariff of the day comes. And that is why these long-term PPAs are slowly getting phased out eventually. And I think all these long-term PPAs are towards their end of the life, most of them, because I don't think in the last 10 years any discom has gone for a long-term PPA. Secondly, on the losses side, so it was somewhere close to 20 to 23%. It has already been brought down to 17 to 18%, and the target of the government through the RDSS scheme is to bring it down to single digits. So that is where again smart meter plays a big role. That is where, and on the two companies that we spoke about, in terms of the GNPA, the public sector enterprises, they are targeting a net NPA of 0%, which will be a very puzzling thing if they are able to achieve, which they surely are very confident of achieving. But if they are looking at a 0% NPA, you can talk about the kind of profitability that these sort of companies can generate in the near future. So, yeah, you have a strong tailwind for the entire space, and it's just about connecting the dots, like you rightly pointed out. And yeah, that is my limited comments.
Also, one very interesting thing which will happen in next 1 year, 2 year, what our regulator, the CRC, is talking about is changing even the contractual agreement, that long-term PPA which has been signed between two parties. How it will split is there is a fixed cost and there is a variable cost in a long-term PPA. Fixed cost and the ROE will be paid to the generator on the basis of what the contract has been signed. But this even the variable cost has to pass through market-based economic dispatch. So whoever in the country comes at the lowest cost structure where the demand is met by all the discom, those only power will be generated and dispatched. So what happened right now, because of the legacy contract, you are always bound to get whatever been signed 15 years back. Maybe there are a cheaper power source which is available instead of the higher expensive one which was signed. But within next 1 year, 2 year, we will witness that India will move towards this called, you can search on Google. It will be MBAD. It was market-based economic dispatch. So only the variable cost you will put in a bid structure so that only that portion, the cheapest one, will be dispatched. That's in a broader way. That's the construct.
True, true. Absolutely right.
So, Dhruv, I guess more or less the questions which were intended to be discussed, I have asked from the comments, and you have taken well time explaining the space. And I'm very sure, just like me, many people will want to go through it once or twice before consuming the rich content. So, anything which you wanted to discuss or yet to discuss, or we had covered it pretty well, and we can surely. Have part two of this session wherein we can specifically dedicate that to questions only. So anything on your part, Dhruv?
No, I think nothing on my part. I think the macro picture has been broadly given. I would next time, we can focus on subsectors or depending upon what listeners would want to understand and answer their queries once they have consumed and they have done their homework in a sense. So yeah, the broad overview of the sectors on the Indian side at least I have certainly covered. I've given you a brief of what sort of scale at a global level we are talking about and it's all completely interconnected. Looking at it in individual silos won't really help. The idea is to look at the entire complete broad picture that is getting played out across the world.
100%. And thank you so much once again. Seriously, it is amongst one of our best sessions, and really, this people, I mean, including me, were oblivion of this space, the depth which we can have in this space, and obviously we can see this energy transition power as a decadal runway ahead. So surely look forward to our next session. Thank you so much, and I would
Thank you.
further request my attendees to appreciate Dhruv by following him. And if you have any questions to him, you can surely tag him or you can write to me. I'll ask him. And the session is recorded. Surely this will be uploaded as soon as possible on my YouTube channel. So if you are yet to subscribe, I would sincerely request you to subscribe so that you do not miss out on such gold mine sessions which we bring time and again. And thank you, Ravindra, for joining and giving your inputs. It's always good to have you, brother. Thank you so
Thanks,
much.
thanks, man. Thanks, Dhruv.
Thank you.
Thanks,
Thank you. It was
Dhruv.
nice speaking. Thank you.
Thanks, Dhruv. Closing for the day. Good night. Take care.
Thank you.